Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at an indicator which I haven't used for quite a long time. And some people think that it doesn't work anymore, but the charts would suggest otherwise, especially in the way I'm going to be looking at it, i.e. it's another indicator that's actually never been wrong in predicting this price before each of the previous halvings and how that's developing in terms of the candlestick patterns and exactly in relation to where we are within that 60-day cycle. And obviously I'll have a multi-frame look at exactly what the price is doing on the different time frames. So if that sounds interesting, without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so always do your wider research before you make any investment decisions or swing trade decisions. So with that out of the way, we'll get straight into this indicator which has never been wrong in terms of predicting this price before the next halving, and this has happened ever since the first halving in November 2012. So here we are. It looks like a chart which is very similar to the multi-time frame RSI smooth entries that we've had a look at in the last few weeks. And if you look at the pi cycle, again, it's very similar to that, but it is giving a different price this time round. So let's have a look at it in its entirety. The actual indicator I'm talking about is this stock to flow. And if you look at the settings, what I've done is I've taken the stock to flow line here, which is these lines here. So I've taken them out just to make it much more simpler, and it's just the Bitcoin model value based on the stock to flow. This is the yellow line here, and the visibility is exactly as it was. So the settings are really the default settings. So in the simplest terms, this is what it's telling us in order to elicit the important information before the halving. So going back to this first peak that we had over here, after we bottomed out, before this halving line, this red vertical line, we came up and actually tested this line twice. So having bottomed out, we came up to this stock to flow line twice before the halving. And we can ignore what happened between the halving and the top here. We'll have a look at that once we get past the halving next April. We're just interested in what happens before the halving because that's what's actually right in front of us in the next few months. The next halving was in July 2016. We'd topped out here in 2013. And then after the bottom, as you can see, one more time, we came right up to the yellow line here where we got rejected. And then we came back and again, before the halving, we came up and retested this. So twice before the halving, we retested this stock to flow line here. Moving on to the last halving we got, which was in May 2020. Once again, having topped out in December 2018 here, once again, having topped out in December 2017, we went back into the bear market, but once we got out of the bear market, once again, we actually found a connection with the stock to flow. This time we went far ahead of ourselves to the 14,000 price. And having lost this stock to flow line here in the COVID situation, we came back before the halving and actually made contact one more time. So once again, before the halving, the price action hits the stock to flow twice before the halving. So that's 3 out of 3 so far. So what can we expect in the current price action? And where is the stock to flow now? So having topped out in November 2021 over here, and once again the price getting rejected around that time, we've bottomed out here at 15,400, and this is where the current price is, around the 30,000. But look where the stock to flow is. It's right up here at the moment at 156,000. However, as you can see, it can rapidly move down as well as move rapidly up. So what I would expect is that as the price rises, I would be expecting the stock to flow line to fall back down to these levels here, around about the bottoms of these troughs here, at around about the 54,000. And that brings it right up to this resistance point here. So if you look at this line, you can see there's a lot of price action around the 52, 53, 54 level. This is the resistance here and quite a lot of resistance over here as well. And quite a bit of support over here. So it would make sense. So while our target before the halving is between these two lines which I've drawn for the last many months now, and that's between 40,000 and 50,000. And most people would actually recognize that 48,000 is really highest likelihood of the price being met when we come back up before this halving over here. But once again, the stock to flow is giving us another clue that it's not going to be much further off from there. So this is a very good region where there would be a very good opportunity to take your long-term profits off the table. Of course, that's not financial advice. We really don't know where Bitcoin is going to go. We only have these indicators to give us some guidance, and everybody has to make up their own minds. But certainly this is what I'm looking at, to take 25, 50, 60, 70% off the table around here, depending on how the price actually gets there. So I haven't fully decided that yet. Yeah, before I move on to the next stage of our presentation today, I just want you to be reminded that the FOMC meeting will be held this Wednesday, where the Fed will be deciding on the interest rates, whether to increase them or not. So the consensus view, as you'll see from here, is that the Fed is likely to increase the interest rates. After leaving interest rates unchanged in June for the first time in 15 months, policymakers on the Federal Open Market Committee, the FOMC, don't appear willing to wait very long before picking back up where they left off. Officials look set on raising interest rates by another quarter point at their 25-26 July gathering, making their 11th total increase since March 2022. So the decision, more than likely, with a high degree of probability, will be another 0.5% increase on Wednesday. So we'll have to have a look at exactly what the consequences of that will be to the Bitcoin price. And obviously, at the current subdued price of 30,000, it's already baked into the price. So anything different will have a different trigger to the Bitcoin price on Wednesday. Just a quick look at the dollar, because as we know, the dollar has an inverse relationship with the Bitcoin price as well as the rest of the cryptocurrency asset. And having called the top over here at 115, we've been following the dollar all the way down. And we've said that this is in a 2 to 3 year decline. So as the Bitcoin price is in the bull market for the next 2 to 3 years, then the dollar is on its way down for the next 2 to 3 years. So far, as we can see, we're at the prices for the dollar here at around about over a year ago. So we've now made a 12-month low coming down here with the prospect of coming much, much more lower. Just like in any bear market, we make lower highs all along the way. So every time we have these counter trend rallies, we make lower highs along the way. So you'll see that there's going to be a stepwise fall to the dollar over the next couple of years. Moving on to the 60-day cycle, not much seems to have been changed, except that we're now more deeper into the 60-day cycle here. So we can see that this red vertical line is the end of this current cycle from the previous red line here. So this is where we are, the current 60-day cycle. So we bottomed out over here around the middle of June. We've had a very strong rally right up to the 31,000 a few times here now, and gone into the midpoint of this cycle on a low point round here. And now we're basically going sideways for the last week or so. And the question really is that, are we going to make a right translated cycle over here going above the previous high, which was before the midpoint here? So this is what we're really waiting for. And that's the $1 million question. And the deeper we go in there, the less likely it becomes. But at the moment, I think, from my own understanding of the cycles, is that the probability is just slightly more than 50% to go to the upside and make a second high here. Only time will tell, but we just need to be aware of what's going on with these candlesticks and the price action. We can see that this long-legged doji candle, which I've been going on about now for many, many weeks, since then, we really haven't had much of a close apart from this fake breakout over here. So we've spent quite a bit of time at the top and quite a bit of time now here at the bottom. So it's basically giving a lot of indecision. It's really trying to test the patience of the people who have impatience in order to shake them out. So this is what I always see what the Bitcoin is trying to do. But just like when we were testing the tops of that range here, we're testing the bottoms of this, but we came back down from those tops. And the question is, will we now go back up do the reverse of that over here. And as we'll see on the larger time frames like the weekly, it's giving quite mixed signals over there. So far we haven't really made the expected move up towards the $32,000, $33,000, $34,000 mark. And if we have a look at the cycles indicator, which is the DSS Bressart, it's giving me a little bit of a hope that we've actually just crossed over at the very low level. And as we can see, whenever it does cross over at the low level over here, we tend to get quite a bit of a nice big move. Once we got over here, once it crossed over, we had this move coming up there, and once again over here. So we could be turning, but what is bearish is the fact that once it came down here, it seems to be just going sideways and down over here. So we'll just have to have a look at that, but it's something to be aware of, that we could quite easily get a big move here, but I wouldn't really count on it yet. The fact that it's actually spent quite a lot of time below this red line here, it opens up the possibilities to the lower sides. And the two levels that I gave you in the last couple of weeks are the 28,400 around here. That would be a logical place for it to find support. And the other one is just at the tops of these candles here and the bottoms of these candles here and here. So all together, around about the 27.3 and the 28.4 is the two levels I'd be looking at if the price breaks below this long-legged doji candle over here at around about the 29.4, 29.5 level. And if you're playing this, then the long-term holders don't need to panic at all. You just need to ride some of these downturns and upturns along the way, because the general trend is upwards. And you really don't need to be getting involved with these little spikes to the upside and to the downside. But for swing traders, this would be a point to actually close part of the trade maybe, and then to try and pick it up at the 28,400 level. So far up to now, we've just had a consolidation within this range here. And that is actually very good in terms of a bullish point of view, because when we've actually look out from the overall point of view, we've had a big breakout and created this long bull flag over here. And this would be a continuation pattern, of course, to the upside. So this is actually quite bullish in terms of consolidation, albeit a very boring period to go through in terms of the price action. In terms of the overall bigger picture on the multiple time frames, if we have a look at the weekly chart, we can see quite clearly that we're still in a bull market over here. We've obviously bottomed out at the 15,400. We've created this inverse head and shoulders over here, the neckline of which is at 25,200. So until this breaks, the narrative of the bull market is intact. And in classical charting patterns, you normally get these inverse head and shoulders at the bottom of a trend, i.e. at the bottom of a bear market, or you get a head and shoulders at the top of a trend over here. So this neckline obviously broke to the downside, and we're expecting this neckline of the inverse head and shoulders to break to the upside. And obviously in classical charting, when we break the necklines here, we normally have a throwback to retest it one more time, and this is classical bull market pattern that's moving back to the upside here. And another indicator that we're still in the bull market and that the bull market is intact is the fact that we are still now above the 200 simple moving average on the weekly chart. So this is the green line. It's still pointing to the upward side, and with the price action is still above it. So not only are we above the inverse head and shoulders neckline over here at 25.2, but the price action is above the 200. Those are very good, clean signs that the bull market is intact and we're still moving to the upside here. And as you can see, we're making this channel, these red lines, that goes back quite a long way on the support side. And on the resistance side over here, the next resistance point is going to be anywhere around this level here, around the 34,000. And that's why there is a very good consensus of opinion that when we do come up towards that line, there's a high degree of probability that we're going to get rejected a little bit at least before we move on to the higher targets that we've got up here. And obviously that would make sense if you look left here. These are not well-defined limits here because there's so many wicks here at different levels. We're ranging from 32,000 all the way up to about 36,000 here. So in between the 32 and the 36, you can see there's a lot of wicks at different levels, which would tell us this is not a well-defined level. Like the 25.2, we've had very strong support and resistance at this point over here. So keep a lookout for this red line, this red trend line. This is where more than likely with a high degree of probability that you'll find that the price will come back and be actual rejected. Just a quick look on the weekly chart. This gravestone doji candle here, this printed about 2 weeks ago now, and it seems to be having a bearish effect on the following candles. So we may well have played this out on the last 2 weeks candles. This is the current one here, but certainly it seems to be playing out in an upturn like this. Sometimes the price actually rejects these gravestone doji candles and just moves higher because the momentum is so powerful. But on this occasion, it seems to be playing out to the downside, and it is actually a majority play out because over 65% these candles do play out. But with a strong momentum to the upside over here, there was a good opportunity and a probability for it to keep moving higher, but it obviously hasn't done that. So the gravestone doji candle is now playing out. How far it's going to play out to the downside, only time will tell, but certainly something to be aware of. Just a quick overview of the strategy. A few people keep asking me what my strategy is, and I have actually explained it quite a few times now, but it's actually quite good to be reminded and to keep reviewing it, because obviously the price action is changing and we always need to be fluid and flexible and to actually move along with the price and not get stubborn into what we want the narrative to be rather than what it actually is. And that is that so far our narrative is that we've bottomed out here at the 15.4. We're now into the bull market over here for the various reasons I've explained many times before. And this is our target so far. This is a short-term target of between 40 and 50,000. And that was based on the smoothed out RSI MTFI, the multiple time frame entries, which is in between these 2 points, as you can see here. The current price for the RSI MTF is at around about the 44,000, and also the pi cycle, which is also exactly in between these 2 points here as well. So that's the confluence, and as we've seen today, the stock to flow isn't actually too far off from there as well, at around the $53,000 mark. So this is a very good region where we're going to be meeting before we get to the halving in April 2024, which is around about here. So a lot of indicators are saying that before we meet this white dotted line here, which is the halving, we're going to be making our way in between this price range over here. And as I've said before, when we do get to this price range, then I would be looking to take off maybe 25%, 50%, 75%, whatever it seems to be the right comfortable level for me. And everybody's got to make up their own mind. And I'm going to be doing that with a view to a pullback, which I would be expecting, as has happened in the previous bull markets, that once we meet those targets where those indicators are suggesting, then there is usually a pullback to between 30 and 50% over here. So that would be the point I'll be trying to pick it up before we move into the parabolic phase and the end of the bull market in around about November, December 2025. So that's where my long-term portfolio would be looking to be heading over the next 2 to 3 years. And as you will know if you've been watching my videos, that I'm not actually invested in Bitcoin at all. My long-term portfolio is in the Bitcoin miners. And I cover the Bitcoin miners in my private members club, which I do a video every single Wednesday, where we actually cover not only the Bitcoin in terms of the 60-day cycles and the overall view of exactly where the price is for Bitcoin, but we also give a very in-depth analysis of many of the Bitcoin miners in terms of the long-term opportunities that are there, which are far, far greater than Bitcoin itself. Not only do we actually highlight the long-term opportunities with the Bitcoin miners, but we do the swing trades based on the 60-day cycles, which we're going to do all the way from now to the end of the bull market at the end of 2025. And last week, I did a little presentation in terms of the difference between where the potential for Bitcoin is compared to the potential for the Bitcoin miners. And I got a deluge of new members curious to find out. So it just shows that there is a lot of people who don't know much about the Bitcoin miners, let alone the massive opportunity that's there. And for those of you who are new, who don't know much about that, here is a 1-minute clip of what I showed last week. 4 months ago, I started the Bitcoin Miners Private Members Club. And let me show you why. So since we bottomed out with Bitcoin here in December 2022 at 15,400, the price for Bitcoin has gone up to the current price at around about 94%. However, in the same period, the Bitcoin miners portfolio that we started here at Wisdom Bytes, and nobody on the YouTube has this portfolio. I'm the only one who actually started this because I have such a belief in the Bitcoin miners and the opportunity that it presents itself. And that started on the 6th of January with these 8 or 9 companies. So for an initial starting capital of $110,000, my target until the halving in April 2024 was $1 million. And the current value of this miners portfolio, as you can see here, is currently up 312%. Currently, this 110,000 stands at $453,000 here. So as you can see now that there is a massive opportunity, and so far the Bitcoin miners have outperformed Bitcoin by quite a lot. But if I look at it from a different angle in terms of the all-time highs, so if you look at the Bitcoin here, the all-time high was 69,000. And from currently where we are, which is around 29,700, if we take the measurement from these current levels to the all-time high, you can see that we have about 130% increase to go before we meet the all-time high. But if you compare that with some of the Bitcoin miners, so CleanSpark, which is one of the Bitcoin miners, which I expect to do quite well, and you can see from here the current price is around 640, but the high price was about 42, 43. And you can see that while Bitcoin is expected to go to 130% to meet its all-time high, CleanSpark would have to go up by 558%. So you can see the leverage play potential over here. And if you have a look at another one, which is one of the companies that we're highlighting on Bitcoin miners, and that's called TerraWolf, from its current price of around about 360, 65 to the top of the all-time high there, this would have to go up by 11x, over 1,000%, the equivalent of 100% for Bitcoin. And one of my favorite companies for the next 2 to 3 years is Stronghold, another Bitcoin miner. And look at the potential that's there for Stronghold. And that is that, so from its current price of around 780 to go to its previous all-time high, it would need to go up by 46 times. So while Bitcoin is expected to go up by 100%, this is expected to go up by 4,600%. And obviously, nobody can guarantee that that's going to happen, but I'm just trying to highlight the actual potential of some of these Bitcoin miners. And because they're a leverage play, so for every time Bitcoin goes up by 100%, they will go up by 500 or 600 or even 1,000%. And if you want to join the Bitcoin Miners Private Club every Wednesday, then all you would have to do is below any of my videos, you can click on the join button over here, or in the description box below, there is another join button for those of you with a handheld device over here. So when you click on that, you'll see that the price is currently at $4.99 per month. And this price is only open as it was an introductory price nearly 6 months ago, to find out exactly whether this opportunity is for you. So the current price at $4.99 is open all the way up to the end of August. So we have about 5 weeks to go, after which the price will change. So if you want to take advantage of that price and are curious about the Bitcoin miners and the great potential that exists there, then you have this final chance to have a look. 1st of September, the price will go up to $22.99. So it's a great opportunity to take advantage of a very low price until then. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.